welcome to today's deep dive. If you are joining us right now, chances are you've been taking a really hard look at your future lately.
Yeah, probably looking closely at those retirement savings.
Exactly. You're sitting there maybe staring at a spreadsheet or an account dashboard and just feeling a little overwhelmed by the sheer volume of options out there.
Oh, it is completely overwhelming.
It really is. You're wondering how to properly diversify your assets to protect what you have worked so incredibly hard to build over decades. So our mission today is to shortcut that research process for you.
We want to do heavy lifting.
Right. We are going to cut right through the noise of retirement diversification by looking very closely at one specific player in the precious metal space, a company called Augusta Precious Metals.
Which is a really interesting case study.
It is. And to do this properly, we are leaning on a highly detailed independent market analysis from the Gold IRA company's bulletin.
Right, which is an excellent source.
Yeah, this research was put together by industry veteran Doug Young, and we are also pulling from a few specific follow-up resources connected to his report.
It's an incredibly comprehensive look at, well, not just what this company does on paper, but the actual mechanics of how they do it.
Okay, let's unpack this, because we aren't just going to list off a bunch of financial products today. I mean, anyone can read a brochure.
Exactly. Brochures are easy.
We are going to explore Augusta's specific approach to transparency and education, and look at how those factors practically impact investors like you. And I think the best place to start is right at the front door of their process.
Their initial point of contact.
Yes. According to the research, their initial approach is heavily focused on education rather than the typical, hard sales pitch you might expect in the financial sector.
It is a distinctly different approach from the industry baseline, in a sector where the immediate goal is often to just close the deal, get the signature, and secure the transfer of funds as quickly as possible.
Just push you through the funnel.
Right. Augusta front-loads the relationship with a massive amount of information. They essentially force the process to slow down.
They do, and they do this by offering these free one-on-one web conferences. But what caught my eye is that these aren't led by some low-level sales associate just reading from a script.
No, not at all.
They are led by Devlin Steele, who is Augusta's in-house Harvard-trained economist and their director of education.
Which is quite a title.
It is. The source material actually uses this great analogy, describing this service as having a personal trainer for your finances.
I like that analogy.
But of course, there is a catch. You can't just sign up for this on a whim. There is a specific requirement to access this level of personalized attention. You have to have a minimum savings of $100,000 to qualify.
What's fascinating here is why the specific educational model matters so much, especially with that qualifying threshold.
It seems a bit exclusive at first glance.
It does, but setting a $100,000 minimum isn't just arbitrary gatekeeping. By requiring a certain level of existing retirement savings, they are intentionally filtering for individuals who already have a significant stake in their own financial future.
People who actually have something substantial to protect.
Exactly. But then, once you are in the door, they tailor this education to both novices and seasoned investors alike. They completely avoid the one-size-fits-all approach.
Which makes total sense. I mean, someone who has been trading equities for 30 years needs a very different conversation than someone who just sold a business and is suddenly trying to figure out wealth preservation for the first time.
Precisely. And by customizing that education, they transform what could be a very standard transactional moment into a highly strategic decision.
Rather than just, here is some gold, buy it.
Right. It forces you to pause and actually think about how you consume financial information. Are you being sold a product, or are you being educated on an asset class?
That is a crucial distinction. It's the difference between someone telling you what to buy and someone teaching you how the macroeconomic landscape actually works so you can decide for yourself.
And that philosophy seems to bleed into everything else they do.
It really does. Which brings us to their reputation. Here's where it gets really interesting. When you look at their consumer ratings, the numbers are, at first glance, almost suspicious.
I know exactly what you were going to say. When evaluating financial institutions, you expect to see some friction.
You expect a few bad reviews.
It is just the nature of the business when you are dealing with people's life savings.
Right. Frankly, when I saw the data, I raised an eyebrow. Augusta holds an A+ rating with the Better Business Bureau, pulling a 4.92 out of 5 stars.
That is incredibly high.
And they have an AAA rating from the Business Consumer Alliance. But the detail that really made me pause: both of those independent watchdog platforms show exactly 0 complaints filed against the company. 0.
Which is almost unheard of.
Honestly, you don't deal with complex IRS rules, market volatility, and retirement funds without upsetting someone at some point. It just doesn't happen.
My initial reaction was exactly the same as yours. It sounds like data manipulation. But when you dig into the mechanics of how these watchdog groups function, it starts to make sense.
So,
Well, in the financial sector, a zero complaint record is a statistical anomaly, but it does not mean they have never made a single mistake or that a wire transfer never got delayed.
right, mistakes happen.
Exactly. Rather, it indicates an incredibly high level of proactive issue resolution.
Walk us through what that actually means in practice.
When a customer is upset, they don't usually go straight to the Better Business Bureau. They call the company first. A formal complaint is usually the result of a customer feeling ignored, dismissed, or cheated after that initial contact.
So they are escalating it.
Right. What the zero complaint record tells us is that if a misunderstanding or an operational hiccup does occur, Augusta's internal resolution process addresses it so quickly and so comprehensively that the customer never feels the need to escalate it to a formal public complaint.
They put out the fire while it's still just a spark.
Exactly.
That definitely reframes it. And the broader industry seems to recognize this operational standard. The source highlights a very long list of accreditations.
They have quite a trophy case.
They were named Best Overall Gold IRA Company by Money Magazine for 3 consecutive years. That's 2023, 2024, and 2025.
A solid run.
And Investopedia awarded the most transparent pricing across those same 3 years. Plus, they are riding a 6-year streak of being named Best Of by TrustLink, where they hold a perfect 5-star rating.
I want to zoom in on that Investopedia award for most transparent pricing because that is perhaps the most important metric here. The precious metals industry can sometimes feel like a dense fog for a retail investor.
Oh, absolutely. It is notorious for it.
Think about the mechanics of buying physical metals. You have the spot price, which is the raw baseline market value of the metal itself.
But you can't just buy spot price gold.
No, it has to be minted into a coin or poured into a bar, shipped, insured, and stored. So dealers add a markup or a premium. In a lot of cases, less reputable companies will hide massive profit margins inside those markups.
They bury it in the paperwork.
Yes. They might quote you a low spot price, but completely bury the administrative fees, the shipping costs, and the depository storage fees deep in the fine print. You end up losing 10 or 20% of your investment value the second you sign the contract without even realizing it.
Which is exactly why that dense fog is so dangerous.
Precisely. By providing real-time market data pricing and explicitly breaking down exactly what the spot price is, what the markup is, and what the ongoing storage fees will be, Augusta removes that fog.
They just lay it all out.
They make the true total cost of the investment completely visible up front. There are no surprises down the line.
And that operational transparency directly ties into the actual customer experiences detailed in Doug Young's report. We aren't just looking at macro-level star ratings. The researcher pulled specific, authentic reviews to show what this looks like when the rubber hits the road.
Real customer stories.
Right. For instance, there is a customer named Jesse C. who has been with Augusta for about 10 years. He specifically praises a staff member whose name is redacted for privacy. But he talks about how she handles his required minimum distributions, or RMDs, flawlessly every single year.
That is a huge relief for a retiree.
It is. He actually wrote, "Each year when I email her, I dread that she may have moved to another position."
Now, for anyone who hasn't hit retirement age yet, we need to talk about why handling an RMD flawlessly is such a big deal. When you have a tax-advantaged retirement account like an IRA, the IRS eventually forces you to start taking money out of it when you reach a certain age.
That is your required minimum distribution.
Exactly.
And if you don't take it, or if you calculate it wrong, the IRS penalties are historically brutal. We are talking about massive taxes on the amount you were supposed to withdraw but didn't.
It is not a mistake you want to make. Now, if you have a traditional stock portfolio, taking an RMD is easy. You just click a button, sell a few shares of an index fund, and take the cash.
It takes 2 seconds.
But think about the mechanics of a gold IRA. You are holding physical gold bars and silver coins in a vault. How do you withdraw exactly 4.3% of a physical gold bar?
You can't just shave a piece off.
No, you can't. It requires liquidating specific assets, finding buyers, converting it to cash, and ensuring the accounting satisfies strict IRS regulations. It is an administrative nightmare for the investor.
Which perfectly explains Jesse's absolute dread at the thought of losing his dedicated representative. Augusta takes that entire logistical burden off his plate. They handle complex asset conversion and the IRS compliance for him.
It speaks to long-term relationship building, not just point-of-sale customer service. Dealing with RMDs is a massive form of stress, and having a trusted contact who manages that seamlessly year after year is a huge quantifiable value add.
Then you have a review from another customer, Richard N. And this one really stands out because it bucks the conventional sales trend entirely.
Oh, the review about the pitfalls.
Yes. Richard was deeply impressed that Augusta was extremely honest in their presentation about the issues and pitfalls of buying gold, not just the benefits. They were willing to repeat the details as many times as necessary until he fully grasped the downsides of the asset.
Teaching a customer about the downsides and the risks of an investment is the ultimate trust-building exercise, primarily because it's so rare.
You really don't see that often.
Think about the financial institutions you interact with. Are they this forthcoming about the pitfalls of the products they offer? It completely flips the traditional sales script. It tells the customer, we want you to buy this only if it actually makes sense for your specific portfolio, and here's a detailed list of reasons why it might not.
But why would a company do that, though? From a purely capitalistic standpoint, why talk someone out of a sale?
Because a misaligned client is incredibly expensive to maintain.
That makes sense.
If someone buys into a Gold IRA thinking it's a short-term, high-yield growth asset, which it isn't, it's a long-term hedge against inflation, they are going to be angry when the price fluctuates next month.
They are going to be on the phone constantly.
They are going to call customer service, they are going to demand a refund, and they are going to file complaints. By being brutally honest about the pitfalls upfront, Augusta ensures that only fully informed, long-term investors become clients. It protects their zero-complaint record and reduces their operational overhead.
That makes perfect sense. We also see reviews from Mabel H. and Craig S., who both praised the full disclosure efforts that completely remove the uncertainty of being first-time buyers.
It is daunting the first time.
It is. The source text uses this great analogy, noting that for beginners, investing can feel daunting. But Augusta acts as a guide in a maze. They utilize a simplified production line process that walks you through every single step and implication of your choices.
A maze is the perfect analogy because setting up a self-directed IRA, which is legally required if you want to hold physical real estate or precious metals in a retirement account, involves a lot of complex moving parts.
Look, you can't just buy a gold bar and stick it in your safe deposit box at your local bank and call it an IRA.
Exactly. The IRS has strict legal walls in place. You, the investor, cannot take physical possession of the metal.
You need an approved middleman.
You need an IRS-approved custodian, which is a financial institution that handles the record-keeping and compliance. And you need an approved depository, which is the actual physical high-security vault where the metal is stored. Navigating between the dealer, the custodian, and the depository is a massive headache for a retail investor.
So Augusta's production line process basically acts as the general contractor.
That's right. They liaise between you, the custodian, and the depository. They take the operational burden off your shoulders while keeping you fully informed of what is happening at every stage of the setup.
And speaking of depositories and moving parts, we need to look at the physical reality of this. We are talking about actual physical metals. So how does Augusta protect these assets?
Security is paramount here.
It is. First, the research notes they ensure quality by exclusively sourcing bullion coins and bars from highly reputable mints. Then, they partner with top-tier, highly secure storage facilities.
The vault.
Right. The text actually describes these facilities as being guarded like a treasure chest in a castle. And on top of that physical security, Augusta conducts regular third-party compliance audits to ensure everything is strictly following industry regulations.
Those third-party audits are critical. It is one thing for a company to simply promise that your assets are secure and compliant. It is another entirely to pay outside independent auditors to constantly dig through your books to verify that claim.
It keeps them honest.
It is an extra layer of consumer protection that proves they are walking the walk.
But all of this brings up the inevitable question, the one every single investor eventually has to ask. What happens when you need your money back?
The exit strategy.
Exactly. You are holding physical gold or silver in a highly guarded vault. How do you turn that back into usable cash to pay for your life?
If we connect this to the bigger picture, liquidity is very often the most stressful, high-friction part of owning physical assets.
It's not like a digital stock.
With stocks or mutual funds, you click a button and you are liquidated into cash within seconds. Physical metals are entirely different. You have to find a buyer, negotiate a fair market price, arrange for secure shipping from the depository, and wait for funds to clear. The friction is immense.
Augusta seems to have built their buyback program to directly answer that exact point of friction. The report details that their liquidation process is incredibly quick, often requiring just a simple phone call to initiate.
Which is how it should be.
They offer competitive market rates based on real-time data, and crucially, there are absolutely no hidden fees or charges during the liquidation process.
By streamlining that buyback process and removing the friction, they are providing ultimate peace of mind. You aren't left entirely on your own to figure out how to sell $100,000 worth of gold on the open market. You know exactly how you are going to exit the investment before you even enter it.
And they back all of this up with 3 specific ironclad guarantees. First, a 7-day money-back guarantee, allowing you to open an account with complete assurance.
Always nice to have a cooling off period.
Definitely. Second, a U100% satisfaction guarantee. If they fall short of your expectations in any way, they actually help you seamlessly switch your account to another provider.
That is a bold promise.
And third, the highest buyback guarantee, ensuring you recover your investment with confidence.
I really have to highlight that 100% satisfaction guarantee. Offering to actively help your client leave and go to a competitor if they aren't happy is a massive flex of confidence in their own service model. They are betting entirely on the quality of their ongoing client experience.
So we have covered the company's educational model, the zero complaint mechanics, the complex IRS processes they simplify, and the guarantees. Let's shift the lens for a moment and look at the person who compiled all this data.
The researcher behind the bulletin.
Yes, who is Doug Young, the author of this report. Because validating the source of this information is just as important as the information itself.
Absolutely. The credibility of the messenger dictates the value of the message. If this was just written by a random blogger, we wouldn't be talking about it.
Well, Doug Young brings over 20 years of experience in financial markets to the table, with more than 15 of those years specializing specifically in gold IRAs.
A deep well of knowledge.
He has extensive real-world expertise in precious metals trading and previously spent 16 years as the financial director at World Freight Services Ltd.
That is a serious corporate background.
Over the last decade, he has authored over 500 published financial research articles and conducted more than 80 distinct gold IRA company evaluations since 2011.
That background is highly relevant for this specific deep dive. A former financial director understands corporate structure, regulatory compliance, and risk management on a deep systemic level.
He knows how to read the balance sheets.
Exactly. And having evaluated over 80 different companies in this highly specific niche means he has a massive comparative baseline. He knows exactly what operational excellence looks like, and more importantly, he knows exactly what red flags to look out for in the fine print.
So what does this all mean? After laying out all this glowing data, analyzing the awards, and explaining the mechanics behind the perfect ratings, Doug delivers a very crucial, sobering disclaimer at the end of his report.
And this is where Doug acts purely as a business consultant, stepping back from the specific company. He emphasizes that all of his market research, his findings, and his shared personal experiences in this bulletin are strictly for educational guidance only.
Yes, the report explicitly states that you, the listener, must conduct your own independent research. You have to come to your own conclusions to ensure that Augusta Precious Metals, or frankly any other service provider you might be evaluating, truly aligns with your own unique circumstances, your own risk tolerance, and your specific financial goals.
Because it is not personalized financial advice.
Right.
It is an incredibly important distinction to make. An independent review can thoroughly verify that a company is transparent, secure, and highly regarded by its existing clients. But no review, no matter how comprehensive, can tell you if moving assets into a gold IRA is the right strategic move for your personal retirement portfolio.
Only you know your full financial picture.
Only you, ideally in direct consultation with your own qualified financial advisor or CPA, can make that determination. The goal of this research is simply to give you the clearest possible picture of the tool so you can decide if you want to put it in your financial toolbox.
Which perfectly brings us to your next step. We've covered a lot of complex ground today, and we want to thank you for joining us on this deep dive.
It's been a great discussion.
If you want to explore the source material further, or if you want to look at how other companies stack up, we highly recommend you visit the Gold IRA Companies Bulletin website. You can find them at goldiracompaniescompared.com.
That is a great resource.
Let me spell that out clearly. That is Gold IRA Companies Compared.com. They have an absolute wealth of related information, detailed structural comparisons, and educational bulletins to help you continue your own research.
Everything you need to dig deeper.
Also, be sure to check the deep dive notes right here on your device. We've included direct links to both the website and the contact information for Augusta Precious Metals, including their direct phone number, which is 855-386-4202.
This raises an important question, something for you to mull over as you continue mapping out your financial future. If a financial company's most effective tool for long-term success is simply providing deep, transparent education about both the risks and the rewards of an asset, how should that standard change our expectations for every other institution we trust with our life savings?